Aion is a joint venture company which was set up in 2011 by Apollo Global Management and ICICI Venture.
Any particular reason why they set up a joint venture and why not?
So in many ways it's an exception to the rule. So for example, Apollo Global has no joint ventures anywhere else in the world. They have no country specific funds anywhere in the world. So Aion is indeed an exception in the Apollo world. The thinking was that India as a market for an American, and Apollo is a primarily American private equity firm, was very different from what they did traditionally. And the kind of deals we do over here, the style of deal making, the time it takes, the sizes of deals, everything was different. Apollo currently deploys capital from a global pool of capital, a global PE fund which is $25 billion. So for a $25 billion fund to invest into a $100 million India deal is just very difficult. So you need a local team on the ground, and Apollo set this up in 2008. Their India business, and they realized that they needed a local partner who understands India better, and they needed to operate it in a different way, in an India-only format rather than a global fund operating in India format.
So your background is ICICI Ventures and you're Indian, right? Would you agree with that assessment? I mean, what is so unique about India that you had to do this?
So most people like to say this, so we are different, right? And hence we need to be treated in a special way in some fashion. The difference is, and since we compare our deals with our global deals, right? The differences I can lay out, and then is it different enough to do it in this format is for people to decide for themselves. So one is, like I said, size. For a large global fund to be deploying deals which are less than 1% of their fund size is very difficult.
So so just on that point, so why is India still, and I brought Mercer to India in 2008, okay, same problem. 100 million was the minimum size and we're still not anywhere near it.
Right.
Why is that? What do you think is missing from the Indian ecosystem?
There's nothing missing. It's just that for our businesses to scale, and we get that often from LPs who also invest alongside us into China funds, right? To say, oh, the Chinese funds are so much bigger and they scale so much faster, and the companies in which they invest scale so much faster. So India has its own pace of growth, and we need to get with that rhythm for you to be a successful investor in India. To say that I want to invest 500 million a pop, and I want to do 5 deals of those kinds in India is unrealistic. Maybe it will get there in the fullness of time, but we're not there today, and hence either you'll make big mistakes or you won't do anything. Those are the two extremes you will be, in my opinion, if you're trying to do it either from a pan-regional fund or a global fund.
Okay, so coming back to the deals that you are investing in, what is the investment philosophy or your sort of USP of what you're doing?
So what we like to call ourselves are that we are deep value investors. Most of India, most of my friends and peers, they are focused on growth, right? Be it a buyout growth fund or a minority growth fund, but growth is underlying, as you would imagine in most emerging markets. We don't do that. We underwrite our deals to very low levels of growth because, again, the philosophy is that of an American firm. You don't see 30% growth in any business, right? So what do we look for? We think the one variable we control the best is our entry price. Every other variable has other externalities to it. Government of India, how a commodity price moves, per capita consumption of a commodity. Most of those we cannot influence, but what we can control is our entry price, and that's what we are completely focused on. That if the average price at which PE deals in India are happening are, say, 12x EV/EBITDA, our deals would be at 6x EV/EBITDA.
So some of the previous guests have said that there's too much dry powder chasing too few deals and valuations are quite high. So how do you actually manage to make any deals in that environment?
We strongly disagree. In the area in which we operate, there are very few players. You can count them on the fingers of one hand. And that is the reason why this style of investing has been successful for our firm globally over the last 25 years. The firm has delivered 39% IRR to our investors.
That's global?
Global.
No, so India fund?
The US. The India fund, Fund 1, which is currently being deployed, we will know in the next 3 or 4 years where it will end up, but that's where our firm is focused on delivering returns. And the reason why we think we can deliver those returns is because we can create our entry at such a attractive price. Probably a question you may want to ask, why would you ever get a deal in this market at that price? So we are contrarians. We will get into sectors which are not liked. There are people who fall out of love with certain sectors, and they're not hot sectors anymore.
Example?
BPO. We just bought a company which is a tech BPO company. BPOs seem to be passé. When you call, I recently flew Lufthansa and they messed up my luggage, and you call and you are answered by a bot. So everything's going to be a bot, right? So why do you need human beings in a BPO? The point is, yeah, your first call goes to a bot. Someone needs to make that bot. It doesn't sort of get into existence on its own. Then, if the complexity is high, and as customers we are getting more and more demanding, you need a human being on the other side to solve it. So you need the tech, and you need the BPO, and the biggest travel companies in the world outsource that work. So be it Expedia, Make My Trip, Lufthansa, United, American, all of those guys don't want to do it in-house anymore. So there will be focused companies doing this, in our opinion. But as a segment, this is not hot. It used to be hot maybe 5 years back. It no longer is. That's where we come in. We think there are sectors which are great, companies which are great, management teams which are great. We would love to own these companies. If we were to buy the same company that we bought last month, 5 years back, we would have paid 2 times the price.
So it is the sectors that you focus on, not necessarily something wrong with the management. Some CEO makes some stupid remark and gets out of favor.
Right.
That has happened in India a few times.
That has, yes. And we do, one part of my business is buying distressed companies. So we are the first PE firm which has bought a company out of IBC. Now this is something we do very successfully in the US, Chapter 7 and Chapter 11. In India, this is very new. IBC is very new. And like I said, we are the only PE firm which has managed to do it so far. We think it's a very, very exciting space. These are companies which have obviously broken down. They're non-performing with the banks. They are in bankruptcy court, so there is something terribly wrong with these companies. The skill is to figure out of those which ones really can be turned around, and can you buy them at attractive prices, and can you rebuild these enterprises to where they used to be.
I'm assuming your money is being raised by your partner, Apollo, in the US.
We raise our own money,
Okay, so
but
what is
obviously
your pitch
most
then?
of our LPs are people who understand how, they like deep value investing. They've been wanting to invest in India for a long time, but they found it too growthy and too expensive. So if you like a value style investing manager, and you want to be investing not in low growth countries like Western Europe or the US, well, US these days is not a low growth country, but you want to be investing in a high growth country, the combination of those two are the kind of LPs who are investing with Aion.
Is there a particular segment of LPs? Like, are they endowments or foundations or people like that?
As I said, primarily US pension funds, a few sovereign wealth funds. Those would be the 2 largest categories of investors.
But they're the same people who also invest in the growth PE funds.
Yeah, so we have 2 types. There are people who have a high growth portfolio and they want to balance that portfolio with something which is a contrarian style. And there are people who just cannot stomach buying a company at that price, and who by nature are value investors. So we have both kinds of investors.
Okay. So anything else you want to say about your firm specifically, apart from deep value? Anything about your firm that you would pitch?
No, we're good. This
ICICI,
is
oldest, all that? No?
people who've been investing in India since the late 80s know ICICI Venture as TDICI, the oldest PE firm in the country. So the reason why Apollo wanted a partner like ICICI Venture was the local knowledge, the reach through ICICI Group that it gives us is unparalleled. We don't think there are other partnerships of this kind. Partnerships are always complex to manage. The fact that this partnership has lasted now 8 years and is thriving and going forward, we think is a great thing for Aion Capital.